Bitcoin and things like it is the equivalent of the red pill.
This is a technology, it's a computing language, and I can build an app on it.
Hi, you're listening to Tanzeel. I recently interviewed Mark Yusko, who is the CEO and CIO of Morgan Creek Capital Management. We talked about everything from how he first got into blockchain technology, why he believes that the price of Bitcoin will reach 500,000 by 2024, and also a little bit about why the SEC probably won't approve Bitcoin ETFs anytime soon. I've not been able to include the whole interview, just small snippets, so I hope you enjoy.
Yeah, so look, I think that blockchain technology is the natural evolution of the technology cycle we've been in really since the 1950s. And there's a 14-year cycle that occurs around significant innovations related to computing power. So in 54, we had the mainframe. In 68, we had the microchip. In 82, we had the personal computer. In 96, we had the internet. In 2010, we had the mobile net. And in 2024, I think we'll have the internet of value. And the internet of value is really going to be driven by blockchain technology. So blockchain technology is again, the evolution of directing computing power toward these related technologies that have to do with cryptography, distributed ledger, trust, etc. And what blockchain does, it allows us for the first time to treat ownership and value, things like money and property and business ownership, in a digital format. So in much the same way that email changed forever communication and commerce, think about the way you and I used to, well, you're young, so we never did this, but back when I had to write someone a letter, put a stamp on it, put it in an envelope, send, wait 3 days for it to get to them, and then wait for them to write something back and then send it back to me. So a week later, we'd have an answer. Now, today, you can shoot me an email, or I can shoot you an email instantaneously, but even more important, the content of that communication is exactly the same as it would have been in a paper letter, but now I can hit copy-paste, and I can replicate that digital asset millions or billions of times. So now we get constant spam mail and all that stuff that we don't love. But you can manipulate or even program, right? I can have a program on my email that tells me when you've read it, or if you've opened it. So I think the idea of money for the first time being programmable and being instantaneously transferable and being truly global and getting rid of trust institutions, I actually think it's the biggest technological revolution that I'll probably see in my lifetime. So maybe there'll be a bigger one 14 years from now, but I think this is pretty big. I think it's bigger than the internet, and the internet created incredible opportunities. We think about all the things we take for granted today, like no one can live without their iPhone, but it didn't exist 11 years ago. Yeah. No one can exist without Facebook or Google. We even have a verb, Google it. Sure. Those didn't exist. I remember when Google was the number 16 search engine. Web crawler and Lycos were at the top. Sure. So it just means I'm old, I guess. But technology is transformational, and I think blockchain technology is transformational. And the relationship of Bitcoin is the first application of blockchain technology to reach critical mass, which allows the network to take advantage of, Metcalfe's law, and the value of a network increases exponentially as the size of that network increases. And so, as Bitcoin has proven, it's the most valuable computing network. It's actually the most powerful computing network on the planet.
Sure.
It's the only computing network that has never had a hack. It's the only computer network in history that's never had a fraudulent transaction entered into it. I mean, it's truly extraordinary technology.
Sure.
And that is just completely misunderstood at this point. And that's why I think we're just at the very beginning stages of what will be a very, very long and transformational bull market in crypto assets, in blockchain technology, and ultimately digital securities, which is the hugest opportunity, well, hugest in the world, the largest opportunity of all when we think about the application of blockchain technology to the traditional world.
Sure. And obviously, Morgan Creek have acquired an investment startup called Full Tilt Capital. Can you tell me more about the business and what attracted you to acquire this business?
Yeah, so look, my journey in blockchain and crypto started back 5 years ago in 2013. A friend of mine, Dan Moorhead from Pantera, had shut down his macro hedge fund and started a blockchain fund and a Bitcoin fund and a blockchain infrastructure fund, a blockchain venture fund. Mm-hmm. And everybody laughed at him. Nobody would talk to him. I spent some time with him and became quite intrigued. But, first of my many mistakes in this space, I didn't embrace it immediately, and I didn't put all my money in his Bitcoin fund, which is now the best performing hedge fund of all time, up over 10,000% since inception. Wow. But I did stay close to Dan and learned from him, and we did dabble a little bit in his infrastructure fund because I made the decision rather than go after the gold or digital gold and Bitcoin that I would go after the picks and shovels. And so we've made some nice returns on his early investments and things like Corbett and BitPesa and others. But what I came to realize is in the first quarter of 2014, I wrote about Bitcoin for the first time. And I write these long quarterly letters, and I put one paragraph. It wasn't even very long on Bitcoin. And I had people calling me up saying, what are you doing talking about this crazy stuff? That's irresponsible, and you're not being a fiduciary, and we'll fire you if you keep talking about this stuff. Like, wow. Crazy.
So you
that
got
was
quite
when Bitcoin
reaction.
was $400. It had fallen from 1,000. It was $400. Now, in full disclosure, it continued to fall to $175 by later that year. But then we've had the epic run since then, and I've started to write more about it. But we dabbled, we invested a little bit, but not enough. I even tried to talk my son into going to work for some blockchain companies back in 2015. He decided not to. We got a little chuckle out of that in Thanksgiving past year. He said, "All right, fine, Dad, you were right, but you're not as smart as you think you are because you didn't mortgage the house and buy Bitcoin." I'm like, okay, point taken. So about 18 months ago, I became, I guess probably longer, maybe 2+ years ago, I started tweeting about blockchain and Bitcoin, and my hashtag was blockchain is big, really big, or Bitcoin is big, really big. And again, just got total grief. And at the end of the day, what I've learned with Twitter is if everyone agrees with you, it's a dumb idea. If everybody hates what you're saying, you're onto something.
You've got to be thick-skinned as well.
Again, I should have gone much bigger, but we made some investments, but I should have gone much bigger because everybody hated when I would talk about it. And so, what is somebody who runs an institutional firm doing talking about this crazy stuff? And about 18 months ago, I came across Pomp. So Anthony Pompliano, local guy, been in the military, did a couple startups, went to work for Facebook, got recruited away to Snap, and then came back home to North Carolina. And it seemed like every time he would tweet, I would like what he said.
Yeah.
And half the time I was saying, man, I would say that. It's like talking to myself, well, younger, handsomer self, because he's better looking than I am. But I said, it's like talking to myself. I got to meet this guy. And we actually had met about 18 months ago when we both invested in an early round in Lyft. But it was a chance meeting in our office for 20 minutes. Wasn't very long, and I didn't really remember much of it. But I said, I got to meet this guy. So we arranged a breakfast, and after about 5 minutes, I'm like, man, we got to figure out a way to work together, because we just thought alike. He had a lot of energy and enthusiasm, and was really insightful in what was coming down the pipe, particularly in security tokens. And make a long story short, I said, hey, we should figure out a way to work together. I said, well, why don't you just acquire us? And he and his partner had run an early stage, seed stage, micro VC fund, and they'd done some late stage investing, which is where we met originally. And they were thinking about raising a second fund and pivoting to be 100% focused on crypto. And he said, well, I've rethunked that a little bit, and so that the crypto really isn't the play here. It's the network effect and owning the picks and shovels and the pipes of the infrastructure that's going to be necessary to build out the crypto infrastructure or the crypto networks. So again, a long story short, we started talking, and he said, yeah, why don't you just acquire us? And so I was like, wait a second, this is great. So we were down, we were a little ways down the road of launching a blockchain opportunity fund, and I realized that if I had a team, that would make our efforts more appealing. So Morgan Creek says, all right, we're just going to do this. They're like, oh, well, you guys have done traditionally hedge funds and private, but what do you guys know about blockchain and crypto? Well, now I have two guys who have been doing this for a couple of years, and that's the beautiful thing about the crypto landscape. If you've been doing this for 5 years, you're the grandfather or grandmother of the business. If you've been doing it for 2 years, you're an adult. Everyone else is crypto kids. And the bulk of people, 90+%, are all crypto kids. And that's not a derogatory term. It's just a logical, 12 months in any industry doesn't make you an expert. And so we decided to, team up. And so we went out and we raised we're in the process of raising a fund together. We're looking at a couple other projects, and so we formed something called Morgan Creek Digital, and that's under Morgan Creek Capital Management is Morgan Creek Digital.
So that's
where we've been spending
blockchain arm, isn't it? And there's also something about tokenizing the business. I read a CoinDesk story. Can you tell me a little bit more about that?
Yeah, so Morgan Creek Digital is the entity that's going to focus on blockchain technology related investing, and our first offering is a opportunity fund. We're talking about raising a large fund to go after security tokens, but we need the infrastructure first so that security tokens can get issued. But that also take a while to raise, because getting institutional investors awareness of this asset is challenging. Although it's been enhanced by Andreessen and the guy who spun out of Sequoia, raising people's awareness and getting some high quality investors to invest. So we're excited about bringing institutional quality thought about investing to this emerging asset class, and I think that's what Morgan Creek Digital's mandate is going to be. The thing for me in terms of my journey is I went from spending none of my time 5 years ago on this to more than half my time today, and growing every day, because the migration of talent out of the traditional financial world into crypto and blockchain is like nothing I've seen since the internet. That was the only time we saw comparable brain drain. And the other thing is the investment opportunities are just so robust and so much better than the traditional world today. I think it's absolutely critical that people kind of rethink the way they allocate capital and embrace digital. So we think Morgan Creek Digital will be asset management for the digital age. It's going to be kind of our tactic going forward.
Sure. Mark, I want to switch on to ETFs now. I think
and so things that are good marketing, they're packaged in an ETF, I have a problem with. good ideas, sound investment ideas packaged in an ETF, I actually like. So when it comes to a Bitcoin ETF, so let's back up. So the blockchain ETFs are silly, right? None of them own any, crypto assets. They own companies like IBM and Cisco and Thai Semiconductor, and they're peripheral plays trying to play on the growth of the industry. And if you look at the 4 blockchain ETFs, they track the S&P 500 exactly, and so they're basically just index funds. So that's a silly idea.
Okay.
A Bitcoin ETF is actually an interesting idea because it will democratize access to this asset. Now, the challenge that the SEC has, and look, I applaud. I mean, I give a standing ovation to the SEC over the past couple years as they've approached regulating and investigating this nascent industry. And I think they've done everything right. I think they've been prudent, they've been disciplined, they've been consistent. They ruled in every way that makes sense in terms of, Bitcoin's not a security, right? It's a commodity or a currency, and they've made all the right decisions, and so I applaud their efforts. Now, when it comes to approving or not approving a Bitcoin ETF, I think that the challenge is correct, that their concerns on custody have still not been addressed. Their concerns on the potential for hacking, and while the Bitcoin blockchain has never been hacked, not once ever, exchanges where people, I would say foolishly sometimes store their crypto have been hacked, and that is a real risk. So I understand their concern about that. And so, I think the new proposals where they're saying, well, what if we use futures contracts on Bitcoin? Tougher to argue that one because we have standard custody for futures contracts, and while the underlying, since they're non-deliverable and cash settled, it's kind of hard to argue against that. So that one might get approved. This new one that's got an insurance wrapper to it, that's also tougher to not approve. But I don't think they've been imprudent at all, and I think even if it took another 12 or 18 months, it wouldn't be the end of the world, because I think you need to make sure that people who invest at the lowest level of
basically protected
and net worth have to be protected against things that are beyond their control. If I can buy a stock and sell a stock because there's liquid trading, I don't have to be protected against that. If it was illiquid, like a private company, then there needs to be some protections. If custody hasn't been solved, then I think I need to have some protections on that vehicle.
Sure. So things will probably happen more organically, won't they? And we'll probably see more regulation coming into place as well.
Well, look, I think, again, the SEC has been really prudent on this. They realize that they don't have jurisdiction over non-securities. So crypto itself, Bitcoin, Zcash, Dash, etc., true cryptocurrencies, which are commodities or currencies, not their bailiwick. ICOs, on the other hand, the vast majority of which probably are securities because they share in cash flows or ownership of underlying entities. Those, I think, they need to have some regulation and some oversight. And the problem is a mismatch of resources to numbers. So I think the SEC's got a challenge. They just don't have the manpower to really regulate, which is one of the reasons I think they will, at some point, mandate the use of these types of digital securities or tokenized assets, because what you can do in a tokenized world is you can actually program compliance into the securities.
That's
right? If you're an accredited investor and I'm not, and you own an asset and you can only sell it over a 12-month period because you participated in the ICO and you got your shares, and you can only sell it in 12 months to another accredited investor, and I say, hey, Tanzeel, I want to buy that, and you sell it to me no one could stop us in the old structure, the analog world. In the digital world, that token wouldn't allow you to transfer it to my wallet because I'm not accredited. I haven't gone through KYC, AML. So I do think that they will mandate at some point, and Pomp's tweeted a lot about this, that digital issuers use digital securities with programmable logic in them. And the idea of programmable money and programmable ownership and programmable securities is life-changing, world-altering. I mean, it's big, really big.
Sure.
So very cool stuff coming down the pike. And I think that's where regulation will actually be prudent and rifle shot as opposed to shotgun, and will actually help things grow, not impede growth.
Sure. Now I'm going to finish off with asking you about Bitcoin prices. What do you think Bitcoin is going to hit by the end of the year? I think Pomps tweeted something about Bitcoin reaching 50,000 by the end of 2018.
Yeah, he's a little aggressive. He's young, but
do you think
aggressive.
That's possible?
I tweeted back in April that 5,000 is the number for the end of this year. And we both come to our numbers in a similar fashion. So we both use at the underlying an estimate of what the network value is worth. And the network value is pretty easy to calculate. It has to do with the hash power of the network and the number of participants and the amount of money that comes into the network. So we actually agree that number is going to be somewhere between 22 and 24,000. Pick a number. So maybe somewhere between 20 and 25. You can't get that precise. Okay. But let's call it, it's going to be 23. We'll just pick a number. It's going to be 23,000 by the end of the year. And that's based on a model that was built a number of years ago that has to do with logarithmic exponential growth, which is the way networks grow. And so we think the network value will be roughly the same. And all I'm saying is that by the end of this year, I didn't see as much of a parabolic move above fair value. And, last year's a great example. So last year by November, the network value was 10 grand. And so when we hit 10 grand, we were right on network value. Everything was great. But as we surged past 10 and went into that frenzy up to 20, that's when I tweeted out on December 18th, actually on December 8th. On December 8th, I tweeted out that, look, this is going to correct. It's going to correct hard. We're way above fair value. And, futures are going to allow people to get short. And so there's probably going to be a big correction. It could fall by as much as 50%. Now, it fell actually more than that. But the reality is now it's below the fair value. Fair value today is somewhere around 12,000. And so I think by the end of the year, fair value is around low 20s. I get to 25. Pomp says, no, we'll have another parabolic move because fourth quarter, you always see parabolic moves. So,
but something big would, I can't. Sorry, I was going to say something big would have to have happened for the price to go back up. Like, for example, a Bitcoin ETF being approved or another institution investor.
No, not at all. Nope. That would certainly accelerate the process. But all that has to happen is the way. If you look at the history of Bitcoin price, this is how it moves, right? It has a parabolic move, and then it has a crash. And then it has a parabolic move, and then it has a crash. And that's the way technology is adopted, right? The early adopters adopt, and then everyone says they're crazy, and it sells off. And then a few new people buy in, and then people start to have fear of missing out, so they jump in, and you get a parabolic move. And then everybody says, no, it's really going to crash, and it crashes. And so if you look at the history, we've had 5 of these parabolic moves and crashes, and we'll have a 6th, and a 7th, and an 8th, and a 9th, and it's just the way it works. So I don't think you need a big event. And look, you've seen it in the past couple weeks, right? As soon as the price starts to run, those people that have been waiting on the sidelines to make sure that the bear market is over are ready to jump in. And then once it actually starts moving, then it starts moving fast. And that's when you get those parabolic moves. So I think my own personal opinion is that the SEC is unlikely to approve something on August 10th. So I think we'll get a little disappointment break after that, and prices will fall again, and we'll have one last dip before the kind of fourth quarter big rally, and who knows where we end up, but that would be how I see things going.
Cool. Thanks for that, Mark. I think I'm going to wrap it up there.
Yep.